If you want to know where the price of Bitcoin, Ethereum, and the wider markets are heading to, then this is the video for you. Bitcoin is sitting at a pathetic 64,000 US dollars. It's really struggling, and the bulls have nothing to say. It's pure silence from the bulls. I don't see them on the comments, but they want to fight me. Let them fight me. It's going to head lower, and I love a fucking bear market. In a bear market, there's 5 stages of grief. The first one is denial. The second one is anger. The third one is bargaining. Please go up higher so I can take profits. I promise this time I will. Then we head to depression. I'm financially ruined. This is the end of me. I give up. And then finally, it's acceptance phase. Things will get better. I've learned from my lesson and now I can move on. 95% of participants are going through this pain. We've all been in a bear market. Well, some of us have been in multiple bear markets. And it's a story as old as time. Yet many folks want to use feelings. They want to use fundamentals to really decipher if this is a cheap price or if we're heading lower. A lot of folks they just have an insatiable demand to use feelings. This is Jim. Now, Jim Simons is one of the most well-known traders out there. This man just uses maths and models to determine where price is heading to. And this is a story about his fable friend.
Very, very good, doing fundamental trading. And he hated the model building. He said, he loved the fundamental trading. He loved reading the newspapers and reading the tickers and the news tickers and getting ideas. And it turned out he was, for a while, very, very good. So we put the models aside for a while, and we traded, and we did very well. We did very well, but it was a gut-wrenching experience. One day you walk in and you think you're a genius. Oh, my positions are in my way. Look, and the next day you walk in and they're against you, and you feel you're a dope. How could I have done what I did, and so on. There was no rhyme or reason. It was just, you put your finger in the air and you try to sense which way the wind is blowing. I'll tell you one story to illustrate the craziness. So it was a time when gold was going up. Gold had been you couldn't buy or sell gold, and finally you could, and the price was rising, and it was rising, and we had a deal where Lenny Baum and I, where we'd each have our own account. I was the boss, but we each had our own account. And in our own account, in fact, we both bought gold. We're supposed to be independent, but we both liked gold. The gold was going up. It started at $200 and $300 and $400, $500. It got to $500, which by today's standards would be like $1,500 or $1,800. And I said, this is a very high price. I'm getting out. And I sold my half. But Lenny, I think you should. No, you don't know how high this is going to go. You can't. This is going to go very, very high. I said, okay. So he stayed. It was $600. It was $700. It was $800. Got to $800. That day, I happened to be talking to a friend of mine on the phone who was a stockbroker. And in fact, he was my stockbroker. And I said, how are things, Dick? And he said, oh, well, they're fine. This morning, my wife, Lucy, came into my closet and cleaned out all of my old tie clasps and cufflinks and went downtown to sell them. They were gold, see? I said, well, you having a hard time in your family? Why is she? So your wife said, oh, he says, she's a jeweler. I said, yes, I know that. So he said, so she only has to stand in the short line. I said, what do you mean, the short line? He says, don't you know that people are lining up and standing for hours selling their gold? I said, no, I didn't know that. Thank you very much. We had a phone in those days. If you picked it up, it was a different phone. If you picked it up, you went right to the floor of the commodity exchange. And I got Lenny in the office, and I put the phone up to his ear, and I said, Lenny, sell the gold. In fact, and he said, no. I said, Lenny, I'm the boss. Sell the blankety blank gold. I was more emphatic than that. He said, all right. So he sold the gold. Maybe it was $810. Oh, but he was mad. And the next day, we came in, and it opened at $830. And he said, I told you. By the end of that day, it had dropped 25%. It was down to $600 all in one day, and it never, of course, went back up. So that is an example of common sense and very good luck. The good luck. If I hadn't called my stockbroker the day I did, Anyway, they held on to that gold. It went back to 200 after a while. We would have ridden it all the way down.
All models are wrong, but some are actually useful. Most participants just use their gut feelings. They just put their finger to the sky and think, you know what? This is cheap. You know what? This is cheap. You know what? This is cheap. You know what? We're going up higher. This is still cheap, guys. We're going up higher. And that's how they get rigged. Every single cycle, they do this time and time again. There are models out there, ladies and gentlemen, that can help participants identify that prices are actually cheap. Now, in 2022, we've done the same thing. Participants in the previous cycle did the same thing. They thought we're going up higher. They just put their fingers to the sky and just called out random numbers. I feel like we're going to 100K. I feel like we're going up to 150, and we hurtled down. Same thing happened here, ladies and gentlemen. They thought that it was cheap. They bought around here and it continued to drop, and then they ended up panic selling. In the previous cycle, it was even more vicious. Every time they kept on calling for higher prices, thinking, yep, yeah, we're cheap, guys. Any minute now we're going to turn around. And we dropped lower. They kept on telling participants that this is cheap, 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 and we dropped even lower. They ended up panic selling, and they never ever came back to Bitcoin and crypto again. This is a model, and as you are aware, all models are wrong, but some are actually useful. Now, this is the MVRV score. Now, I'm not going to go through what it measures and so on and so forth, but this has helped me every single cycle to find bottoms. And I use different models to help me find where the bottom may be. In 2015, we hit this green area and it actually marked the bottom. Likewise, in 2018, when all the boltards were saying, guys, this is cheap. Surely this is cheap, but the price actually got even more cheaper. And many participants ended up panic selling. In 2020 March, we had COVID. It kissed this green area. And finally, I know you're very, very familiar in the previous bear market where most of you participated in. It got to the green area. And many participants were calling for lower prices. They were calling for 12K, 10K. And this model, ladies and gentlemen, called the bottom. But here I am trying to convince you lot that we still have some more pain to go. But you want to fight me in the comments. You want to continuously fight me and say, no, guys, we've bottomed. This is a double bottom, a sweep of the low. How pathetic. We're going to end like every other cycle in the green area. Maybe, just maybe, this time is different. The CVD score, one of the best bottom indicators. Big up to Willy Woo. Every single bottom has been predicted by this metric, almost to the T, ladies and gentlemen. It showed a bottom in 2012. It showed a bottom in 2015. This model wasn't created until later on, ladies and gentlemen, but the most notable is during this period. This called decisively the bottom of the bear market. As for now, in this current beautiful bear market, well, it hasn't even got to the CVD score. For all the price cheerleaders out there, for all the boltards that are telling you guys, it's not going to make another low. No, surely. They're going to make you end up buying tops and selling bottoms constantly. This is what they were bred to do. History often rhymes. I really don't care about the news. I don't care about geopolitics. I really don't care about Mr. Walsh over there. In past cycles, we've had 3 years of up, 1 year of down, 3 years of up, 1 year of down, 3 years of up. I'm going to include the wick, ladies and gentlemen, and 1 year of down. Every single cycle, market makers and their ilk always, for some strange reason, backtest the previous bear market red candle. We done it during the previous cycle in 2018. Bitcoin hurdled all the way down roughly 70%, 80% and some change, all the way back to 15,000 US dollars. Now in this cycle, I predict we're going to do the same thing. We're going to retest this previous bear market candle at 48,000 US dollars and some change. Now, are we going to stop right there? It didn't happen previously. We wicked all the way to 15,500. But that area, ladies and gentlemen, is where big money is going to step in my opinion. On this channel, we've been covering the entire bear market. While most of your favorite YouTubers, favorite influencers have slowly disappeared, making new channels, just disappearing, I've been covering this brutal bear market. Now, most of you don't like me. I get it. You don't like it. Everyone wants to fight everyone at the moment. Everyone's a bunch of brokies at the moment and they're scared to buy. Now I get it, but we are gonna get out of this mess. We've covered this entire bear market successfully. We've mentioned the peak at top, we've mentioned the ebbs and flows, and I think we've done a great job. In 2022, in the previous bear market, we formed a dead cat bounce. The show was over, we swept the highs. In this current cycle, we formed a dead cat bounce, we swept the highs, made a pathetic top at 125k. Once we formed an up thrust, we hurdled down, there were no more buyers left, and we formed selling climax. In this current cycle, we formed an up thrust, hurdled down, formed selling climax. We formed distribution, and this was a diagonal pattern, formed distribution and an up thrust. Likewise, in this current cycle, it almost looks picture perfect. Distribution, further up thrust. I shorted here, you know my story. We hurdled all the way down into selling climax, and then another distribution phase of selling climax. Likewise, in this current cycle, from the peak to the trough, finally made selling climax. In the previous cycle, we had a counter trend rally. Bitcoin went up from the very peak to the trough. From here to here went up 46%. Likewise, in this current cycle, we done the exact same thing. Everyone was calling for higher prices. This is finally the bottom. This is it. We're gonna recover. Things are different this time. And it done exactly what it was supposed to do. And here we are today, standing at an edge of a cliff, while everything else is pumping gloriously. Bitcoin and crypto is struggling. They're on their feet and knees wishing for a recovery. But the pain will continue, ladies and gentlemen, just for a little bit longer. Now, you don't have to be a rocket scientist to understand that we're heading up higher. Ideally, we're heading up to 72, 75. This is the region I'm looking for. In July, we're going to see markets rally. But in summer, categorically, seasonality plays a big role. Crypto doesn't fare well during the summer. And we're going to do what we've always done in the summer. We're going to languish in these bottoms, but not make a durable bottom. And then finally, the day comes where we break their necks. Every summer, ladies and gentlemen, the volatility gets weaker and weaker during a bear market. The market is just really struggling, and it needs a catalyst, like a real catalyst to break. On the 4-hourly chart, it does look bullish. We're forming higher lows and higher highs, higher lows and higher highs. This is sustainable. Normally what happens after a massive selling climax is that we retest these areas to confirm once again we're in a bear market. My next area of control is around $70,000 and some change. Now we could head lower, just scare some folks out. I'm not against it. We could wick slightly lower and get more participants, even more bearish, but we won't. I repeat, make durable lows. Most of you won't believe me, but history always repeats. The RSIs during the previous cycle looks almost identical to this current cycle. We formed a capitulatory bottom on February. We formed a capitulatory bottom for the RSI on the 27th of June 2022. We formed, price-wise, a new durable bottom, yet the RSI was at 30. Likewise, in this current cycle, it wicked to $59,000 and some change, yet the RSI was at 35. We're going to form a new bottom while the RSI forms a hidden divergence. This is how a bottom is actually made, not by simply putting your finger to the sky and just using feelings to decide whether something is cheap or expensive. We have a new website. We've revamped the website, and it's more for quantitative research. I want to be able to give participants an edge by providing good data. We've also made an index. Now, out of all the bazillion different coins, ladies and gentlemen, you can follow this altcoin index. It's a weighted index and it follows Bitcoin dominance. Now, if Bitcoin dominance gets to 60 or 7% or 70% or 80%, it will follow Bitcoin dominance. If it goes lower than 60% or 50% or 30%, it will redistribute the weighted index. And we hold primarily primarily Bitcoin, Ethereum, and we also hold equities in this. You can learn from this. You can incorporate this into your portfolio, ladies and gentlemen. You don't have to be die-hard maxis in crypto. This is very similar to the S&P 500. Now, the S&P 500 is a weighted index. It has 491 companies. Then it has the Mag 7, of course, which is the staple of the index. Likewise, in this index that I'm trying to make is pretty much similar, where it's going to be heavily weighted on the bigger players. And then you have your upside, of course, in some of these different tokens and crypto companies. I have Tron, Monero, Robinhood, some mining companies, MicroStrategy, Coinbase, and it's actually outperformed Bitcoin. There's an equity sleeve and it has all the equities in there, and it's just a small fraction of the weighted index. As you can see, some of them hold 0.5%. It's up 14%, 17%, 5% for the day, and so on and so forth. Then we have the crypto sleeve, and then as you can see, some of the best performers. And then of course we have the relative strength, and this is Bitcoin dominance. Okay, this is the main reason why we allocate different coins into this. Now the exposure is very, very minuscule, so it helps you protect your upside and downside. So you have 0.5%. It's up against Bitcoin dominance at the moment as 76%, and these will change every month or every quarter. These allocations change, but the bare minimum, the weighted index, the heaviest index, actually stays. You don't have to be a VVV maxi. I know most participants end up just buying 3 shit coins, and if it goes to hell, they just give up. When you can just buy a weighted index that moves all of these coins back and forth, and it protects you from the downside, of course. I'm still playing around with the index. I'm still trying to get the perfect formula. In the past 7 days, it's up by 10%. In the past 14 days, it's down by 14%. Compare that to holding some of these shit coins. Well, they're already down by 90%, 80%, ladies and gentlemen. And then on the 90-day, you have a drawdown of 10%. All right. So this is how it works, ladies and gentlemen. And then on the yearly, you have a drawdown of 35%. Now, Bitcoin is down almost 55%. Some change. Ethereum is down 70%. Solana is almost down 80%. And some of your favorite shitcoins are down 99%. Before I go, ladies and gentlemen, thank you for watching. Thank you very much for watching. The bear market will be over and we will see happier days. Please, guys, it does help the algo. Press the like button, subscribe, and you're going to see better content. See you soon. Peace.